I hope you're having fun trading. This is an exciting business. And in this video, I'm going to show you the different aspects of just some general or some standard signals that we see in the system. There's nothing unusual about them. They happen all the time. The one I will comment here that I'll encourage you to watch the 10 videos to be watched first. There's a tab on that, and the reason I do that is because a lot of people will skip around and look at this video and look at that video, and they won't understand the terminology that's given in the videos. And if you watch the 10 videos, suggested first videos, that will define and explain and just give you the necessary information to have the rest of the videos understandable, or more clear in their understanding as it relates to what we say. So I encourage you to do that. The other thing is, don't forget I call it the green candle activity theory and the red candle activity theory. When you find setup, you know that setup is either going to be for a short position or a long position. So you're anticipating a green candle or a red candle the next day. In the candle activity theory, like for example for the green candle, it opens up and it goes down, and then it goes up, and you have the candle body, and then before the end of the day it comes down, creating the upper tail of the green candle. Same is true with the red candle. It opens up, it then goes up, and then goes back down, turns red again at the open, goes down to the bottom, comes back up, and that part that it comes back up creates the lower red tail. This obviously does not happen every time, but in the vast, I guess in my mind it's the majority. Some people might say a little bit less, but you'd be amazed at how often that pattern is followed. And there can be a couple of bounces to it, but that's in reality what happens most of the time. Excuse me. And so I encourage you to keep that aspect of, when you're anticipating a green candle, and what can happen, for example, is that the exchange can open it, gap it up real high. And so then it gaps up real high and it goes up a little bit and goes right down into a long red candle. And so if you would have bought it at a huge gap up, you would have anticipated buying it long, but the exchange gapped it up so far that the only thing the market could do was reverse it back down into the range at where it was before. And that happens a fair amount of times. So just when you're planning to trade a particular stock going up, and that happens, and it just causes confusion, and it'll fluster you in your, do I make that trade or don't I, or what do I do? And so keep that in mind all the time as you're trading. Let me switch now to the charts. I'm going to start here on the right with the red vertical line, and this basically is an area where we can see there's 3 red candles got us to this position, and now there's 4 green candles after this position ends, and we have what's referred to as a low angle down in the zip gray, And our low angles down and our low angles up are key to, they happen a lot. They're key to recognizing that the next day is going to be, in this, when it occurs at the bottom, the next day is going to be up. When they occur on the top, then things will go down, typically. And so let me let me go to the power chart now. In the power chart, we have the power Zion in a low angle up, and again that's indicative of the next day it's going to be a green candle. But we have something here that's even a little bit unusual. We don't see it too often, and it's a paired line divergence. And by that I mean, when we designed the system, we put the system together in pairs, and you do it that way because then you can determine strengths and you can determine power when you have one line to compare it against another line, and it just gives you all kinds of benefits to the analysis while you're trading. And so, for example, on the power chart, the power blue and the power pink are up, whereas the power white and power yellow are going down. And we call it paired divergence. It doesn't happen a whole lot, but when it does happen, it usually causes a reaction. If all your lines are low, the reaction is that it goes up. And one way that we can see that we are low is that in the power red, which is the lowest line, we have looks like about a 5 or 6 day high right leg W. And if you don't know, high right leg W's are one key setup that tells us it's going up the next day. And so there's just a significant amount of stuff in the zip chart and the power chart that tell us things are going to go up the next day, and obviously a few more. But let me switch over to the red vertical line in the trend chart right over here. The key to this whole thing, the reason we found this setup, or would find this setup rather, is that in the trend chart we have what's referred to as the green-pink down touch. And it usually, basically, let me expand this a little bit. What it amounts to is that the green line down touches the pink line, and it stays above the pink line. The red line goes down farther, and in this case it goes down and touches the blue. This pattern normally occurs when all 5 lines are above 0. And in fact, I will show you one here that I've got set up. This is Apple, and I've got the zip chart and the trend chart on here, and this is January 27th, 2015. And you can see the rule for the setup is that the red line go below 0 and that the green line down touch the pink. And so when you set the code, excuse me, it basically just says that it needs to be under the blue line and above the pink line, and it needs to be going down. And so with those parameters, you'll end up, after you run the scan, you'll end up finding that stock that has that particular setup to it. And that's a big reversal pattern. And one of the big reasons that it also helps in the reversal part of it is that you're sitting in about a 10-day or 15-day right leg higher W. And that just creates a lot of pent up power, if you will. And you can see that that this went from here. It looks like well, the low on this day was $109.03, and you would have wanted to because it opened above the red body the next day, and that open was 117. So it literally opened $8 instantly overnight. It's amazing what this this particular indicator finds, or I should say reacts to. I will say this one is a little stronger because the trend red is at -15. Most of the time this happens. This can happen where the red comes down and touches the zero, where it's actually above the zero line, especially if the yellow line is much higher. But oftentimes the red line will go down underneath the zero from about 1 to 5 or so, and then it reverses back up. So a lot of power pushing it down, and it just the reverse action. You just had a lot of power with the up gap. So now switching back to this setup that I have, that is when you end up finding the trade, you find it either you're going on the radar screen and looking up columns of data, or you're going on a scanner and you're just putting you're running the scan with the condition set up, and you find alerts like this. So whatever method you use, you'd end up finding this, and you run it a couple hours before the market closes, and you can buy it, take a position on it before the market closes and take advantage of the gap up. Or in this case here, it didn't gap up, but it made a significant 2-day move. The next day, the second day, was actually the gap up. And that often happens. But anyway, let me move on to the white vertical line. In the white vertical line, we have a condition that is a BOC in the trend gray. BOC is bottom of cycle, and it's actually a bottom of cycle higher. So it's a ABC pattern. The C is higher than the A. So it's a when this happens, I mean, think about it. We've got a bottom of cycle pattern on a peak. So when that happens, it's divergent in nature, and it causes things to happen. And in this case here, if you look at if I give you some look at it this way, it actually gapped way up. Obviously a red candle opens at the top of the body, so it gaps way up there, and then it comes back down the next day. So there was a lot of force in there. Also, the thing that helped us was that we had the trend yellow, pink, blue lines telling us that we were in a medium uptrend, and so that would also pull the open up high. But we're obviously our narrow lines are the ones that control the real narrow moves. Like in this case, the 3 red candles, they go quickly. But the impact of what you see between the red vertical line and the white vertical line is evident in the swing chart. The swing red and green are both under zero, and it looks like they're both going down. And so if you look over on the power chart, you got the same situation. The green is underneath the orange, meaning it's going down. So how do I say, the overwhelming pressure is to move things down. Because when your wide lines, like your power green and orange, their trend, when they're going down, the market has a tendency to move down. But there is a factor involved. When the lines are under zero or above zero, it makes a difference. And in this case here, we're going down and we're under zero. And so we have the reaction that we had. We also, like for example, on this vertical white day, we know that the thing is going to go down. Even though the exchange gapped it way up, it went down. And then just going on to the next day, you can see that on this next day we have a swing Zion in a low angle up. So that's going to tell us that on this day that it's going to go down the next day. And if we move this thing over one, we see that the zip pink is in a low angle up, and that's going to take us down. The green has come down. The yellow and blue zip lines are in a low angle up. So there's just there's several lines right there. The zip gray has gone down. It's actually in a TOC lower, when that's significant as well, because there's a difference between a top of cycle lower or a top of cycle higher. So the trend, or excuse me, the zip gray basically runs hand in hand with the zip red, and so it's basically, you know, obviously telling us that it's going down. If you're not aware of it, the zip red line and the swing pink line are the two fastest lines in the system, and they're both related to the price. And I guess, I don't know which one you can say is faster, but it's they're both pretty good. While we're on that particular topic, I'm going to switch over to the white line that you see on the left side here. We have, in this case here, we have a, pull this back, when we have a small red candle on the top, and next day it's going to be a long red candle. And so we can see that we have a low angle up on the trend red, which that tells us we're going down, but the trend gray is going down right now as well. And the trend gray is a divergence recognition indicator. It spots divergence ahead of time, and it's an excellent indicator. It just gives us a lot of insight at the right time when we need it. And because look at your yellow, pink, and blue. They are telling you that the medium trend is to go up, but that isn't what the most critical lines are. Your fast moving lines, like your trend red and your trend gray and trend green on the trend chart. Those are your fast moving lines, and when they're telling you things are going down, then, and in this case, the trend red is telling you it's going down by having the low angle up, and the trend gray is telling you it's going down because it literally has turned around. The trend green hasn't given you any information there. But if you look down here in the swing chart, you have a low angle up in the swing Zion, and the fast one, the swing pink, is going down. So again, we know at this point on the white vertical line that the next day it's going to go down. And you know, then if we go over here, and and one thing that really cinches it and is really a major key, and that is the zip Zion line. And if you don't know the rules for the Zip Zion line, when the Zip Zion is highest, then price moves down. When Zip Zion is lowest, then price moves up. And there's two examples here. In between the blue and the green line, you have the Zip Zion highest, and look at what the price does. It goes down. Same is true over here. You have the Zip Zion highest at the green candle. It's buried inside on the previous one. It's buried underneath the blue line on the previous one. But on this one here, Zip Zion is the highest. And the rule is when it's the highest, price goes down. Now those I will oftentimes, I'll follow those into swing trades and not worry about them at all. Because as long as especially when it starts up higher, you know, you often don't know. Like here, in this example here with the white vertical line, if you stayed in the trade, you really broke even the second day because the exchange gapped it way up. I mean, they gapped it in halfway into the red candle the following day. So, you know, again, I'm a day trader. Normally I'm out of the market and then I buy again the next morning. So if I would have done it that way, it would have been just fine. I would have made some decent profit by buying it, because I knew at this point it was going to be a red candle the day after this white vertical line because of the Zip Zion rule. When it goes, when it's highest, it goes down. All right, and here's your catching one right in here on this this very left side of the chart. You've got a huge red candle up here and a big gap green candle down at the bottom, and that's where Zip Zion was highest again. So the one line I didn't talk about was the blue line. The blue vertical line here has a in this case we have divergence between the Zip yellow, which is going up, and the Zip blue, which is going down. When that happens, it causes a reaction. Now in this case, it causes a reaction to have a downtrend, and again it depends on where it's at. If the yellow and blue are way down at the bottom, you would usually cause an uptrend, and this is over the 50. The yellow Zip yellow is actually at 67, and so bingo, it identifies and tells us that we are going into a downtrend. Now, not knowing exactly what you're you know, you might say, well, boy, I'm not sure if it tells me that. I'm not sure I can see that. What else can you identify with that would give me that information? Well, one of the things that you have, for example, in the power chart, is that you have your pink and blue lines are in a bottom of cycle lower. But what it does, or when it does that, you basically are identifying a downtrend, because the definition of a downtrend is to have lower highs. And so as you go through the downtrend, there's points at which you have highs, and they are just always going lower and lower each time. And so here we have a 2-day high and it's lower, and that identifies and puts us into a downtrend. But another thing that's a real issue that shows that is you have you have the big drop in the red candle, and it's called a power move or power notch. and the red candle comes down, it notches and goes down, it crossed over zero, and then really continues way down. But oftentimes when you see, like for example here, the power white, when it's in a 2-day straight line down scenario like it is here, that is indicative of a down movement as well. It's not, you can argue that could easily go the other way, and that type of thing. But again, here we've got a little bit of divergence between the power red and the power Zion, and if you're probably not familiar with it, but the power red and the power Zion are a pair, and we specifically created them to operate as a pair. When they have divergence, that's usually identification, and it's easy to pick up as an alert in a scanner. The red lines, the power red's going down, and the power Zion is going up. And so when you have divergence, you can look at what you're seeing, and you can see that you're going into a downtrend. For example, up here in the zip chart, you have a zip yellow that is in that bottom of cycle higher. The zip yellow line, the ABC line of zip yellow, is an ABC higher, and it's on the peak, and that's just always indicative of the next day down. If we go over here to the the trend chart, this one has just a absolute, I don't know how to say it. I guess I can't say guarantee, but it's always, something could always happen. But the one key thing that you have on the blue line is that you have the red has gone under the green, and if you understand the format behind the pairing of the red and the green line, when the red travels under the green, you're in a downtrend. When the red travels above the green, you're in an uptrend. Okay. Now, this one over here didn't go up much until you had the green candle on the last day, but because we did have a couple of, or a decent pullback there on that day. But even so, when the red is above the green, you're in an uptrend. Now, that and the fact that the paired line of the red and the gray trend, the trend is in a it's on the right side. It's not on the left side, but it does a BOC lower, and really it's again an identification of the start of a downtrend, because it basically is a lower high, as I mentioned earlier with a couple of those other lines. But it's a repeat of a similar line in one of the other charts, but red is down 2 days at the blue vertical line. The green has turned over, and it's now in a TOC pattern, which is a down movement. And if you go down to the swing chart, you got both the swing Zion and the pink in power notch moves down. The yellow is going down, and in this case here the gray is going up. But even the swing red and the swing green are going up, but they're under zero. So the power that they have, it's not as much as you'd like to see it, and obviously it wasn't enough because the market pulls 5 red candles. But the halfway through this, right about, looks like about this, I'm going to move this blue line over to, at this point, the swing blue is crossing under the swing red line, and that's the start of a downtrend. So at that point, you know that this trend is to go down. And we've obviously been in a trend when the gray line did a BOC, or established the lower high for the downtrend. That was the peak of the trend trio, blue, pink, and yellow. At that point, everything started going down, and that was on the last green candle. So again, you can, by reading the lines and seeing where things are moving, you can identify just what's happening or going to happen in the next few days. But always, excuse me, always do your trading one day at a time. You might stay in the trade but analyze it every single day. You have to do that, otherwise you are going to lose money. The last one well, wait a minute, I guess I talked about that one already. All right, that ends this video. It's just a bunch of standard moves that take place on our charts within the system, and I'll comment. I'll comment by saying, you know, people have different jobs, and some people don't like their job. And for a long time, I developed real estate, and I loved my job. And I love this job I have now. It is fun. It is exciting. It gives you an opportunity to make money, and you have control of your outcome. Because the most important part about trading is to be able to independently choose the next transaction. And that independence is what this system is all about. So have fun in your trading.